The Japanese digital asset market is navigating its most significant stress test of 2026, as Bitcoin sits at nearly half of its October peak. The digital asset treasury strategy, which became a corporate trend in Japan last year, is undergoing a brutal reality check. While some firms are reading, the institutional heavyweights are moving deeper into the plumbing of the financial system. Welcome to Japan Digital Asset Weekly, episode 69. I'm Keisuke, Steve Wakyodo, and venture partner at Onigiri Capital. The market correction has reached a critical point for Japanese listed companies. On February 6th, Bitcoin fell to the $62,000 range, a sharp decline from $126,000 all-time high seen just 4 months ago. The impact is most visible with Metaplanet, Japan's leading corporate Bitcoin accumulator, now holding over 35,000 BTC, the fourth largest corporate holding globally. Their unrealized losses expanded to over 200 billion yen. This is a staggering reversal from October last year, when they reported 90 billion yen in unrealized gains. Metaplanet's stock price has dropped 30% over the past month, though CEO Simon Garavitch remains steadfast, stating that Bitcoin tests patience before it rewards conviction. However, the DAT trend is showing signs of fragility. Gravure, another listed firm, recently liquidated its entire 4.6 BTC holding to book a loss of approximately 8 million yen, triggered by internal loss cut rules. While nearly 10 Japanese firms adopted that strategies recently, expanding into Ethereum and Solana, the current climate is exposing the risk of the pure HODL approach. At Wakyodo, we anticipate a rise in exit companies as firms prioritize balance sheet stability over market volatility. In this market, buzzwords aren't enough. Success in Japan requires a compliant GTM and real enterprise traction. As your strategic partner for Japanese regulated digital assets, Wakyodo specializes in high-impact sales and execution. Let's build your long-term presence in Japan. Contact us today. While the secondary market's in turmoil, the infrastructure build is accelerating. On February 5th, SBI Holdings and Startale Group announced Strium Network, a Layer 1 blockchain specifically designed for the on-chain trading of financial assets. This partnership is built on deep institutional trust. SBI is leveraging Startale's proven track record in developing high-performance blockchains like Astar Network and the Sony-backed Soneium. Strium marks the third specialized blockchain in Startale's portfolio, cementing their position as the primary technical architect for Japan's heavyweights. Strium is a dedicated platform for tokenized stocks and real-world assets, designed to support 24/7 markets and AI-driven high-frequency transactions. By securing the backing of industry titans like Sony, by a recent 2 billion yen investment from the Sony Innovation Fund and the SBI, Startale has consolidated the strongest possible institutional support in the region. This signals that the real digital asset foundation is being built by the most trusted names in Japanese industry. Laser Digital, the digital asset arm of Nomura Holdings, has applied to the US OCC to establish a national trust bank. If granted, the Laser Digital National Trust Bank will allow Nomura to provide institutional custody and staking for digital assets and US government securities across the United States. Simultaneously, Laser Digital Asset Management launched the Bitcoin Diversified Yield Fund, which generates additional yield through arbitrage and DeFi strategies. Despite Nomura reporting losses in the digital asset segment this quarter due to the market downturn, the aggressive regulated play proves they are positioned to be the primary regulated gatekeeper for institutional capital. The current shakedown in the DAT sector is a necessary evolution. The initial wave was driven by price action. We are now moving into the infrastructure integration phase. The real story isn't the temporary drawdown on Metaplanet's balance sheet. It is the fact that Nomura, SBI, and Sony are building the regulated pipes for the next decade of finance. Startale's emergence as the trusted developer for these titans shows that the Japanese market rewards those who provide utility, compliance, and enterprise-grade reliability. The window for hype-only entry is closing, making a sophisticated GTM strategy more critical than ever. That's all for episode 69 of Japan Digital Asset Weekly. If you found this episode helpful, please like, subscribe, and share. Thanks for watching, and see you next Monday.